Hey everyone, welcome back to the channel. I'm Doug, the retirement guy, with all the finance needs that you need in retirement. Today we're going to go over the RecShares weekly income stream, reviewing all four of the funds. They released their dividends late yesterday, so that didn't allow us to play into the game of buying if we wanted to buy into these. But before we get into that, we got a big shout out to all of our Patreon supporters. You guys are phenomenal. We appreciate you every single day. They continue to grow. We are at record levels right now of Patreon supporters and just love it. And for the rest of you, if you're a subscriber, welcome back. If you're not a subscriber, don't be afraid to hit that subscribe button. Also hit that bell notification notice. Don't miss any of these videos because they're all designed to try to make more money to put in your portfolio. Let's get into today's video on the RecShares weeklies.
Notice to all viewers, the past performance does not guarantee future results. The information provided in this video is for educational and informational purposes only. It should only be considered financial or investment advice. Always ask a financial advisor before making any major investments.
Now, one thing with RecShares, I want to tell you, the goal of their funds is they use a balanced growth and income portfolio. So half of the fund is seeking to generate that weekly income via covered call strategies, and the other half remains uncovered, allowing for upside potential. So this is the only company I know right now that's actually using a double tier system that half your funds are collecting income and the other half are collecting growth. So when it first came out, I was real excited about this and thought this was going to be the greatest thing ever in weeklies. And it's been a great experiment in learning how this thing operates. So they're getting the enhanced exposure of targeting 1.25 leverage on the select funds, and then half the portfolio goes uncapped for the upside. So we will show you here, is it working, is it not working? Of course, you're not going to get as much growth or income as a standard fund would do, but you're not losing the upside that the other ones won't give you. So it's an interesting balance. Let's take a look at the first side of the thing, is the growth value. When we take a look at it, they had a decent week this week. Across the board, everything is up. And truthfully, across the board, other than the MSTR fund, everything is actually a year to date has grown. Even their Coinbase is at 0.85, but it's starting to take off and grow again. So we look at all of these. Everything is virtually at either the 2-week average or just a touch above, which is a positive thing, means the funds are definitely growing. NVII has the best growth so far at 28.14. Tesla is not far behind it at 18.89%. So they've really recovered the Tesla program, and overall, very inexpensive funds, giving you some decent growth across the board. Now on the distributions, unfortunately, I'm not real excited about these growths, but they are steady and flowing. So you take a look at it, the coin is down just a little bit. Of course, that's going to be down if you guys are not familiar with how that works. The less volatility you have in a fund, the less you're going to get in dividend payouts. And unfortunately, one of the big things that's happened in the coin, this is not just a RecShare problem. This is a coin across the board problem. Bitcoin has had a very limited volatility lately. It's almost like it's lost its direction, which way it wants to go, up or down, or bounce all over the place. So it's been holding tight. So you don't get as much as the income as you do, and you'll notice it in Rex primarily because you're not getting, only half of it is actually working for you. We go down the Tesla side of it. Tesla's had a nice little run on themselves a little bit. So, you see a little increase up there at 2.99, so about 30 cents per week per share. MSII is up a little bit, 7 cents. Again, 7 cents is not a big number unless you have a ton of shares, but that one at the higher price that it has is not going to make it a one that you're going to get a lot of shares off of unless you put a lot of money into it. And then NVII paying a nice 21 cent little increase over last week. But then we look at the yields, year-to-date yields so far. You got to remember, these funds have only been out since realistically June. So we're dealing with about a 3-month program right now, and you're seeing some decent, solid numbers across the board of 54%, 34%, 23, and 19. So not bad for a quick 3-month exposure onto these programs. The returns per week, what we basically look at this with is what we call, you take your dividend, you divide it by the share price of the fund to give you what percentage of your dividend is actually coming to you in dividends. And what you want to see is realistically here, if we can see something in that 1.5 and above, it's kind of one of those, just an indicator to say, hey, take a look at this. This could possibly be a bigger income piece. This could be something establishing. To give you guys an idea, like ULTY is normally about 1.6. So that would be like the ultimate king in the percentage of dividends. So if you can get somewhere to that 1.5 to 1.6, you're actually in the ULT category, and you could actually increase it. But all of these you can see are below 0.5%, which doesn't make it exciting again. The only one that's real strong is the Tesla, TSII, at 1.04. So these are kind of what I would classify as funds that you buy, you set, and you forget and just let it do its thing. And you're not looking for big, massive income. This is just a slow, the tortoise in the race. These guys are just the slow pouring in the regular money and just drip this thing like crazy unless you need the money for retirement, to pay your bills. So nothing exciting, nothing phenomenal with REC shares in this point of it. When we look on return on investment, this kind of comes back to the same thing again. On return on investment, if you're not familiar with this one, I'll explain it real quick. Return on investment is a way that a lot of people do investing. I personally do this myself. What I want to do is, how quick can I get my money back that I invested into this? So I'm just going to use Tesla, the one in green right now. If I was to buy this fund at $28.83 today, put $28 out, how quick will I get my money back and turn this into what I classified as a cash cow, which means I have no money invested into it, but I'm collecting a dividend each and every week, just paying me. Normally with weeklies, you want to see this under the 1-year mark, 1 year or less, and then it's almost like I want to classify as a no-brainer. You just jump in, you go for it, and you're done. When you go above 1 year, then you got to dial into is how long will that dividend last? Is the pricing right? And do a lot more research. So the whole thing here is when we look at these, when you look at their COII right now is over 4 years. That's way too long. When NVIDIA is 2.89, still way too long. MSII, 5 years. The closest one they have is the Tesla one at 1.8 years. And like if you've watched other things on our channel, you'll find out and you'll see there's a ton of Teslas that out there, from Roundhill and Yield Max and different ones that you can get into for well under 1 year. Same thing with NVIDIA. So for these, again, this is why I call this one, overall, I call it you set it, forget it, and just collect your money and go. Because the safety that you have is it's working half on its growth, half on its income, and it's noticeable. The half that you're missing on income just ain't there. So if you're want to be on the safe side, this is the place that you want to be, a little safer, a little controlled across the board. And that's just, unfortunately, this is the way the program works. So total returns, if you take a look at, and this is really respectable across the board, our total yield on the funds themselves have all been very good. Year-to-date growth, other than the MSTR one, everything is in green positive numbers. So when we take a look at it, the winner is Tesla, up 72.92%. NVIDIA up 62.67%. COII is at 24.52%. And MSII, or the MSTR growth fund, is at 2.38. So none of them lose, But 3 out of the 4 are very, very strong, very nice numbers that give you some solid growth. So their program works. I got to give them credit. Their program works. You're getting a good income with a solid growth for a very safe investments of working equally together. So overall, very pleased with what you get from it. But you're not going to make record income. You're not going to make record growth because you've split your time in half. So a lot of complaints that people have with weeklies is that I can't get growth and I can't get income. All I get is heavy income and I lose NAV erosion. Well, here's your solution to the entire problem. Let's take a look at Doug's fund. I did this when first thing came out. We bought into this. We did not do research. We did not jump into anything. We just jumped in and bought shares. That's why our numbers, we wanted to see how well our numbers do. But our fund value is up $382.92 or 9.53% growth of the fund over 3 months. So it's not bad. The only one that's really killing us is going to be MSII, and that one realistically, we're down. You know, we put $1,000 in each one of the funds back in June. I want to say it was June 16th, I believe it was. We put $1,000 in each one of these. It's the only one that's actually down across the board. Our dividends are up $529.52 or 13.23% over 3 months. So very solid again, equal base across the board. So far in 3 months, we have gained $912.51 on a $4,000 investment for a 22.81 total percent return. So we're pleased with we're pleased with what we're getting. We are not going to be sitting here saying and talking big numbers and big income across the board. So there's going to be no one going to say, hey man, I bought this and now I'm making $5,000 a week, unless you poured a ton of money into this. But there's also no one going to sit there back and complain that I'm sitting back on a huge NAV erosion across the board. So I got to give it the hands up to Rex. They're doing exactly what they set out to do. It is working. It is a great program. And all I can continue is to say, does this fit someone's portfolio? And it really fits the people who don't like that big NAV erosion, but like that regular weekly payout. And this is where you want to put your money. So guys, it's Doug, the Retirement Guy. If you like the video, go ahead, give us a like button. It helps the channel out. And if you're not a member, remember, hit that subscribe and leave any comments down below. What do you think about Rex shares? I may not sound like I'm real positive about it, but at the same time, it's a safety. It's my safety net. I do own all of them. As you saw there on the screen, I do own all of them. I do have money invested into them, and I keep an eye on it at all times. So guys, we'll see you next time.